From the staff of Fitchburg Access Television, welcome to another episode of North Central Journal, featuring the cities and towns, the people, and the events here in North Central Massachusetts. Hello and welcome again to North Central Journal. I'm Scott May and have an interesting show for you this month. We have Brenda Albert from LAER Realty Partners joining us, along with Jamieson Burgoyne, a loan officer from Fidelity Bank. And you're right, we're going to talk about real estate. That's the whole point of the show. And we begin, Brenda, with you. And because I've known you for a long time, I know you're a local real estate agent. How long have you been in the business to begin with?
So I've been in real estate for 32 years, 32 plus years. Yeah. So, and prior to that, I had a 10-year working for digital in the customer service role and just took it to wanting to completely help the consumer to purchase their first homes.
Yeah, I was going to ask you, what prompted you to get into real estate?
I think just being able to control the whole transaction and being able to help people through. Instead of depending on different departments in different places, just wanting to own the whole thing and being able to help.
And Jamieson, a loan officer with Fidelity, how long have you been in the banking business? Forever?
1985. 1985, yeah. Scott, yeah. And things were a lot different then, but yeah, 1985, so what would that make? About 38, 39 years, roughly? Something like that.
Something like that, yeah.
Mm-hmm. Yeah, and about 12
I'll
or 13.
do the math while we talk.
Yeah. And about 12 or 13 at Fidelity.
Yeah. What would your, and I'm going to begin with Jamieson, what would your first piece of advice be to someone who's thinking about purchasing a home?
Oh, my goodness.
From the mortgage end of things.
Okay. From the mortgage end, I think the most sage advice I could would be to have the prospective client have all of their information at their disposal for when they either meet with in person or on the phone or via email. It's critical that that first-time buyer have all their information about where they work, how long they've been there, where they live, do they own, do they rent? Well, do they rent? How long they've been living there? Source of the down payment, all kinds of little speed bumps that they could run into along the way. And by having that information available, you really keep that to a minimum.
Brenda, what's your first piece of advice? Someone who's thinking about buying a home, let's say for the first time.
Yeah. I would highly recommend that they do their due diligence and seek out a buyer's agent. Seek out an agent that's going to help take them through the process, advocate for them. There's a distinct difference between a buyer's agent and a seller's agent. Seller's agents are working for a seller. Buyers need to have a buyer's agent. How do you get a buyer's agent? Referrals always great.
Yep.
Ask your mother, father, cousins, friends. Sometimes if they had a great experience, they're gonna refer an agent to you. But that would be my recommendation. Don't go it alone.
So I'm going to follow up with that. What is the most common mistake that you see that someone who wants to buy a home makes?
Oh, there's you know, and yes, first thing I do with my fresh new buyers is I send them to a couple really strong loan officers and get them pre-qualified. Absolutely need to be strongly qualified to be able to make that next move to even start looking. Not even worth looking unless they've got a loan in place. And
Jamieson, you said be prepared, have things that you need to refer to or to show a little bit of your background?
Well, actually, a lot of their background.
A lot of the background. So what are some of those things that people should be prepared with?
So if you are a wage earner, that is, if you work for a company or somebody, they will issue a W-2 form. That's the statement of earnings that you've made for the past 2 years, okay? So it's typically pay stubs, W-2s, and bank statements.
Okay.
So pay stubs or pay slips, generally for a 30-day period, and generally 1 to 2 years worth of W-2 forms. And then if you are self-employed, if you own a business, whether it's a corporation or sole proprietorship, now you need either 1 or likely 2 years of U.S. federal 1040 tax returns. But both cases, whether you're a wage earner or self-employed, you will need 2 months worth of bank statements, because the underwriter, who is the decision maker in the whole process, not just a computer, but an underwriter, will look at those deposits to see where'd this one come from, where'd that one come from, where'd this one come from. Well, gee, you know, I sold my snowmobile and deposited the cash, that type of thing. So
Yes.
those are things that it's critical to have at the beginning, not 2 weeks before the closing.
Right. Buyers need to be prepared. They need, when it comes time to get a loan, they've got to have their paperwork in order. And together we can help buyers through that. But
okay.
it can be buyers can get a little frustrated because they just, let's just get to the end. Well, we got to get this stuff done to get to the end, because you got to be looked at as a really strong we have to negotiate for you. We have to be able to say, I got a buyer, I'm bringing them to the table, and here's their letter that says they've given their loan officer all the things, underwriting's looked at it, we're solid. Not worth going to the table without it.
What should someone be prepared for financially in terms of a percentage on the loan that they come up with, cash percentage?
So that will vary greatly in the
Yeah.
advent of down payment assistance programs, and Fidelity Bank does participate in a lot of programs, okay, where people can buy a property with 0 down out of their own pocket.
Okay.
There's different types of government loans, but anywhere from 0 down, typically, or more, but 0 to 20% down, you're now in the realm of private mortgage insurance. Freddie Mac and Fannie Mae, who are the two quasi-governmental agencies that oversee doing mortgages nowadays, they set the rules. They say if you purchase a property with less than 20% down, you have to obtain this. We call it PMI, private mortgage insurance. Of course, after 20% down, it doesn't matter. So.
And there's gift opportunities. There's a thing called generational wealth right now, that if you're a parent that has a property and you've got a lot of equity, because there's properties out there today that have a lot of equity, as a parent or a grandparent, you might want to say, I want to gift some money towards my children's purchase, because as we know, housing costs have gone up dramatically, quickly. And that's also an option, is I've seen some parents and some grandparents pull from their own properties.
A wonderful way to do it.
Yes.
Yeah. Oh, yeah.
Yes.
If someone's in the market, interested in buying a home, there are open houses that
Yes.
people can attend.
Yes.
If I'm going to an open house, what should I be focused on?
So you're a brand new buyer and you're out starting to look around. Well, hopefully you're looking around and you're making it clear that you have a agent that's working for you, a buyer's agent. If you're an agent that's going around without representation, then you're walking into an open house with an agent that's working for the seller. So you are not being represented at all. That agent is going to write up your offer, do the work, but their fiduciary responsibility is to that seller. So I would say get your buyer's agent. Then either the buyer's agent comes with you to the open house if it's a serious property that you're looking at, because the market's very fast. Bring them with you. And if you're going alone, sign in your buyer's agent's name so that it's clear that you have somebody representing you. And when you're walking through the house, you got your top things that people, bedroom count, condition of property, some of the mechanics of the property. If you don't have a lot of money, then you want to look at those bigger items, the roof, the furnace.
Sure, yeah. Now, what is the difference between a buyer's market and a seller's market?
Yeah.
How do you define those?
Basically inventory, because if there's
Okay.
not a lot of properties on the market now, and you got a lot of buyers, now you're a seller's market because, you know, you're a commodity. You're one of a few houses and there's a lot of buyers looking versus an increase of inventory and not too many buyers. Now we're competitive on the sale side.
Now, how would you describe the market today?
Current market,
Yeah, the current market.
it's a seller's market
It is.
in most price points. Yeah, you get those little ranches, and not many of them come on. And when they do come on, boy, that's
They're
a
gone.
commodity.
They're gone, yeah.
And we got some 55 and over and young couples that love those ranches. So there's some certain properties too that are even more sought after.
Mortgage rates. Want to go there?
Yeah, oh, my
Well,
goodness.
not today, but generally, where are we in the mortgage market, and where do you see it headed, say, for the rest of the year?
Oh, if I
Hard to
knew
say.
where they were going, I'd be a very rich man.
Yeah.
So, probably in the past couple of years, a standard 30-year fixed rate, which appears to be the benchmark that buyers are looking at, the 30-year fixed rate has gone from a low of, I don't know, 2.5%, 3% past couple of years. And then, of course, everybody is aware how the interest rates have been going up. I think that's due largely to the Federal Reserve Bank setting their monetary policy to try to combat inflation. That's what's doing it all currently. And gee, I think a couple, 3 months ago, the 30-year fixed rates got up around 8%. Now they started to come back down, but mortgage interest rates, when they go up or down, it's never in a straight line. It's always jagged. Little up, little down, more up, little down, so on and so forth. So we look at trends. The slope of that line actually is what it's called. But so currently, they are considerably higher than they were 2 years ago, but not as high as they were 4 or 5 months ago. And I know that the feds are really actively watching the inflation figures. And of course, every week, different reports come out that will affect interest rates. But I think, my own personal opinion, I don't think we'll see the threes again, but I'm hoping for maybe high fours, mid to high fours, low fives in the next couple of years. That would be fantastic. That would be fantastic.
When should someone consider refinancing? If a mortgage rate is at 8% and it comes down to what? When should I decide, okay, I'm going to refinance at that rate?
Excellent question. So what will happen is if people, even though the interest rates are 7, 8% now, they'll need to buy houses. So the whole idea is that once they close on a house, they go into my, I just have a system where I know what they closed at,
Yeah.
and I can set a little alarm that at 1% below the rate they closed at, I begin to kind of look at it. That's just generally where I think it's a good idea to start looking, is certainly at 1.5%, no doubt 2% below the rate
That's usually,
is the way, you know, I'm calling them up to say, okay, remember me, I did your mortgage 2 years ago?
Yeah.
It's time to refinance. You'll save quite a bit per month.
Yeah, usually that 2 points.
It's
right?
usually
Yeah.
2 points, yeah.
Yeah.
But
Yeah.
I begin to look at about 1%.
Yeah, yeah.
Another piece of advice from you, Brenda, would be if someone is looking at a property, they have the opportunity to buy it or rent it. What do you recommend?
Oh, if they can buy, they should buy.
They should buy.
There
Okay.
is just real estate. There's just no loss. There's just, you know, why pay someone's rent when, and you know, you're not getting anything back from it.
Yep, yep. Okay, pretty simple then.
Pretty simple.
If you can buy,
yes, buy
Yeah.
if you can buy, and that starts with a mortgage officer or the bank. Yes.
I know another thing that you are involved with is recommending to people whether they're selling their home or should they undertake renovations. Stay where they are and maybe add an addition.
Yes.
How do you balance that?
Yeah,
I mean,
that's great, and I do a lot of that. After 32 years, there's been people that I've sold houses to that try to make that decision. We're having another child. The house is just not big enough.
Yeah.
Is the return here for us? I do spend time with people and say, what are you looking for? What are you looking to do? How intense are you going to be about this addition? What's your quote? Is it going to pay you back in the long term? If it's not, then let's put it on the market. If you love it because your mother's next door, there's no change in that. You know, that's a great babysitting situation. Then stay and let's, you know, if some people say, I'm never leaving, you know, never say never, but some people will say I'm staying forever. But most of the time I tell people, I understand you want to stay forever, but you know, it's an investment, and a job could happen. There may be something, and you always got to keep your house in your mind as an investment. Don't overbuild if you're in a place that may not support the numbers. And
Then that gets me to another question, and that is a property owner who is ready to move on and maybe are considering, instead of selling their home that they are currently in, renting that property and moving on. How do you make that decision, and what do you recommend? Because renting, okay, you have income coming back in.
Yes.
It may cover your next mortgage.
yes.
How do you make that decision?
It depends on the financial situation for the people. If you can keep a property and rent it, absolutely a great thing to do. I mean,
Yeah.
I've got people doing it more now than I've seen through the years, and their feeling is they're getting more of a return investment-wise than the actual market, stock market. So
Yeah.
because rents have gone up so much. So if you can put the process in place, put the leases in place, manage your tenants, be okay with being a landlord, I highly recommend if you can do it. But if you need the money from your house to move on to the next house, which a lot of people do need.
Usually that's the first consideration.
That's the first consideration.
I can't do this unless I
Right.
sell this house.
Which leads to, I mean, I hate to do that, but with Jamie here, if there's people out there and they're sitting in their big houses and all their money is in their house, there is a fear factor today that they're going to be homeless. Where am I going? I want a small house. Nothing's coming on the market. I want a condo. Nothing's coming on the market. There's programs in place to help people through the mortgage process that will allow them to use their house as a bank so that they can go get a mortgage, go make an offer on a new property, live in their house, then put their house on the market after they find their property. So
Also known as a bridge loan. I knew exactly what you were.
yes, yeah.
A bridge
So a
loan.
bridge
Yes.
loan where you have a house here, you see that house there, and you really want to buy that house.
Yeah.
You have a ton of equity over here. What Fidelity Bank will do, even if the house is listed on multiple listing service on the market, Fidelity Bank, depending on the qualifications, would lend a portion of the equity in that house that they can use as a down payment on house 2. So at the end of the day, what happens is now they've succeeding in purchasing the house they love.
Yep.
They own this house, so they still have to qualify for it. But once this house sells, okay, they take the proceeds from that sale and they still have equity. And what they'll do is they will make a principal payment. Once this house is gone, they'll take those net proceeds if they want to, and they'll make a principal payment. As long as they do it no more frequently than once per year in an amount no less than $10,000, Fidelity Bank will recast that mortgage amount without having the homeowner go through the cost $5,000 or $6,000 or $7,000 worth of refinancing.
Yeah, wow.
So when the dust settles, they've got the new house, the old house Brenda has sold, and
Yeah.
They've got the mortgage that they want.
It's an absolute issue today. It's bogging up some of our inventory because people are sitting in their homes and they're afraid. So, and you are not in a strong negotiation position when you have to make your purchase contingent on a home sale. So this allows us not to have to do that. So if people want to know more about that, certainly, I think that's a great avenue to investigate.
How would you define the real estate market here in North Worcester County?
It's strong.
It is.
It's a strong market. We're getting a movement from the east. It is not uncommon to be at an open house and have Winthrop and Dartmouth, and they're just 10 years ago they weren't coming this way. We had not, but now there's a migration of a push out to our area. Our pricing is so much lower than that area that they come out and they say, "Wow,
Sure.
that's a great house for that price." So there's on top of our own locals, we're getting people moving out, and certain hot properties, ranches, like I said, condos are hot, are even hotter than typical.
And it's very competitive.
Very
in that
competitive.
What we hear, the layperson hears, is that someone was asking for X number of dollars for their home and they got 10% more.
Yeah.
And there was a bidding war going on.
You put a price on based on what's recently sold, and it's kind of like almost like a start point, and then buyers take it from there. And it, depending on how you priced it originally, if the market's still crazy hot, they're driving the price up.
Now, putting aside the fact that you are a real estate agent, what would you say to someone who says, I'm not going to use a real estate agent, I'm going to do this on my own? What are the pitfalls there?
Yeah. I tell people it's one of the biggest things you do in life. You are getting married, you're having kids, and you buy a house. I think you need professional support through it. There's a lot of things that can happen. You can lose money, you can make a mistake. I highly recommend it. I would not go it alone. Would not.
I want to add to that, as an observer on the sidelines, looking at what the realtors do for their clients, I don't know how, there's not enough hours in the day knowing what you folks do. It's just really is something.
And it's, you're from the beginning to the end. There's a number of steps, and the way that real estate agents get paid, we don't get paid until we actually close a property. So we're going all the way through, and we're running here and there, and we're taking, but that's because most real estate agents love it, and we want that good end result of people being happy, moving on. And I mean, my business is referral. And if they're happy, then they're going to hopefully tell their cousins in there. So
if you're my real estate agent, we become best friends, basically.
we become best friends. You're coming to my coffee time. You're coming to my, yes. You're going to hear from me all the time.
Now, as we get close to the end here, there's one thing that I wanted to ask both of you. Jamieson, we'll start with you. What would be the one piece or two pieces of advice you would give to someone who is considering buying a home from a financial perspective?
Again, I'm going to hearken to that real need to have all of the information for when they meet with their lender, whether it's on the phone or in person, whatever. At Fidelity Bank, we use a process we call the CARE process. And CARE, first we connect and we collect the information from the client. Then we analyze that information so that we can now make recommendations for the client. At Fidelity Bank, like smart friends, we use our hearts and our minds to give the client the clarity and confidence to move forward so that they can get to where they need to be, where they want to be.
Yep.
But this all plays into having that information up front,
Right.
not 2 weeks before the closing.
And Brenda, your piece of advice?
Buyer's agent, go out, get yourself educated. Biggest thing is referral is great because you know that person had a good experience. If they're referring, take that agent and interview a few others. When you choose that buyer's agent, have a sit down, have them explain the process so that you're going in eyes open. Just don't be unrepresented.
Do agents, real estate agents, even though you're competitive, do you work together too at times?
I want to, yes.
Yeah.
I believe that there's, I look at my real estate partners and people I work with as like we're all together. We're in this. We're helping each other.
Yeah.
You know, so yes, absolutely. We all want the same thing. You know, we all want the consumer to have a good experience through the housing process. And I mean, everybody wants to buy a house, right? Everybody, nobody wants to be, that's a dream. And we help people to make that happen.
Mm-hmm.
And they want to go through it as smoothly as possible.
Sure.
Yeah. And
Yeah.
it's a big transaction. And people don't think it's a big transaction. And there's a lot that the bank needs. Up until the day before, I've jokingly said they want your last born. Just give them what they need. Give them what they need. We need that paperwork. We want to make sure you didn't go buy a car yesterday. Don't go over there and buy some
amazing.
furniture.
Yeah.
You know, people don't know that unless you're working with you know, the professionals in the industry that are
Sure.
going to say, don't go out Memorial Day weekend and buy your appliances. No, no, no. You know, but it's happened. So that's why we're talking about it, because it's happened. You know, so yeah, they need a strong mortgage officer. They need a strong buyer's agent. Rest will happen. We'll walk them through.
If people want to reach out to both of you, Jamieson, how do people get in touch with you?
The best way is on my mobile phone at area code 978-424-3196. And I generally can be reached from 7:30 in the morning up until 9 at night. In this business, you have to be available for the client.
Yeah.
You just have to be, especially on weekends. So I never shut that phone off. Now, my email address is jburgoyne@fidelitybankonline.com.
And Brenda?
Cell phone, 978-621-3168. Text me, call me, I'm on. My email is balbert@LAER Realty Partners. And I also have a website. It's home.com, just like my license plate, youarehome.com. Yes, yes. So.
Well, we want to thank you both for being with us. Very interesting experiences, careers, and certainly the advice that you've given to our audience, I think, is going to be well received and appreciated, and we thank you very much.
You're
Thank
very
you.
welcome.
Thanks for having us. Thank you.